What's going on, everyone? It's Rahul Mali. Welcome back to the channel where we talk about building wealth and achieving financial freedom. Now, let's be real, we all want to be rich, right? I'm talking real financial security, the kind that gives you options and peace of mind. Today, we're diving into the top 10 asset classes that are making people rich in the USA. We're going to break down how these assets work, why they've been so successful, and some key things you need to know if you're thinking about investing in them. Stay tuned for some fascinating examples, stories, and facts. Okay, let's be real. You can't talk about wealth building without mentioning real estate. It's one of the most tried and true methods for accumulating wealth. From the bustling streets of ancient cities to the modern-day urban landscapes, real estate has always been a cornerstone of wealth creation. It's the classic, the OG, the asset that's been building wealth for centuries. Just think about the grand estates of the past, the sprawling manors, and the towering skyscrapers of today. All of these started as simple plots of land. Think about it, people have been buying and selling land and property since, well, forever. The concept of owning a piece of the earth has always been appealing. It's a tangible asset, something you can see and touch, unlike stocks or bonds. And there's a good reason for that. Real estate is tangible, you can see it, touch it, and it's not going anywhere. It's a physical asset that provides a sense of security and stability. Plus, it can be passed down through generations, creating a lasting legacy. Plus, it has this amazing ability to generate cash flow through rental income. Imagine owning a property and having tenants pay you rent every month. This steady stream of income can help cover your mortgage, maintenance costs, and even provide extra cash for other investments. You buy a property, rent it out, and boom, you've got a steady stream of passive income coming in every month. This passive income can be a game changer, providing financial freedom and the ability to pursue other passions or investments. And that's not even mentioning the appreciation. Over time, the value of real estate tends to increase. This means that not only are you earning rental income, but your property is also becoming more valuable. Historically, real estate has shown a tendency to increase in value over time, meaning your initial investment can grow significantly. This appreciation, combined with rental income, makes real estate a powerful tool for building wealth. So, whether you're looking to buy your first home or invest in multiple properties, remember that real estate can be a key component of your wealth-building strategy. Now let's talk about stocks. Stocks represent ownership in a company, and owning stocks means you own a piece of that company. When you invest in stocks, you're essentially buying a small piece of a company. This piece is called a share, and it gives you a stake in the company's future. You become a shareholder, and as the company grows and becomes more profitable, the value of your shares increases. This means your investment can grow over time, potentially leading to significant financial gains. Think about companies like Apple, Amazon, Tesla. They started small, but look at them now. These companies have grown tremendously, and their early investors have seen their investments multiply many times over. Early investors in these companies have made absolute fortunes. By getting in early and holding onto their shares, they have reaped the rewards of the company's success. Of course, the stock market can be volatile. It has its ups and downs, but over the long term, it's historically trended upwards. This means that despite short-term fluctuations, the overall trend has been positive. The key is to do your research, invest in companies you believe in, and hold on to those investments for the long haul. By staying informed and patient, you can navigate the ups and downs of the market and potentially achieve substantial financial growth. Now, not everyone is comfortable with the volatility of the stock market, and that's totally understandable. If you're looking for a more stable investment option, bonds might be your thing. Essentially, when you buy a bond, you're loaning money to a government or a corporation. In return, they promise to pay you back the principal amount plus interest over a set period. Bonds are generally considered less risky than stocks, and they can provide a steady stream of income, making them a popular choice for retirees or those looking for more conservative investments. Now, let's say you want to invest in stocks or bonds, but you don't have the time or the expertise to research and pick individual investments. That's where mutual funds come in. A mutual fund pools money from multiple investors and invests it in a diversified portfolio of stocks, bonds, or other assets. This diversification helps to spread risk. Plus, mutual funds are managed by professional fund managers who do all the research and make investment decisions on your behalf. It's like having a personal financial advisor, but without the hefty fees. Now, ETFs, or exchange-traded funds, are very similar to mutual funds in the sense that they offer diversification and are managed by professionals. However, ETFs trade on stock exchanges just like individual stocks. This means you can buy and sell them throughout the trading day, giving you more flexibility and control over your investments. Plus, ETFs tend to have lower fees than traditional mutual funds, making them an attractive option for cost-conscious investors. There are ETFs for pretty much every sector and asset class imaginable, so you can easily find one that aligns with your investment goals. Okay, let's talk about the elephant in the room, cryptocurrencies. Over the past few years, crypto has gone from a niche technology to a mainstream investment, creating millionaires and capturing the attention of investors worldwide. Bitcoin, Ethereum, Dogecoin, these digital currencies have shown incredible growth potential, but they're not for the faint of heart. The crypto market is highly volatile. It's like riding a roller coaster with its extreme highs and lows. Investing in crypto is all about understanding the technology, managing your risk, and being prepared for a wild ride. Chapter 7. Commodities Investing in the Essentials. Now let's move on to commodities. These are the raw materials that make the world go round, things like gold, oil, natural gas, and agricultural products. Investing in commodities can be a good way to diversify your portfolio and potentially hedge against inflation. For example, when the value of the dollar goes down, the price of gold tends to go up. You can invest in commodities through futures contracts, ETFs, or by investing in companies that produce or process these raw materials. Chapter 8. Private Equity, the big leagues of investing. Now, private equity is a whole different ballgame. It involves investing directly in private companies or buying out public companies and taking them private. Private equity investments are typically made by high-net-worth individuals and institutions, and they often involve large sums of money. The goal of private equity is to improve the operations of a company, increase its value, and then sell it for a profit a few years down the line. It's a high-risk, high-reward type of investment. Chapter 9. Venture Capital, Fueling the Future. Now, if you're looking for the next big thing, venture capital might be your jam. Venture capitalists invest in early-stage companies with high growth potential. Think tech startups, innovative healthcare companies, companies that are developing cutting-edge technologies. Venture capital is extremely risky. Most startups fail, but the ones that succeed can generate massive returns. It's the fuel that drives innovation and has the potential to change the world. Chapter 10. Collectibles, from stamps to supercars. And finally, let's talk about collectibles. Collectibles have fascinated people for centuries, offering a glimpse into history, culture, and personal passions. These are the things that get people excited. Rare coins, which often tell stories of ancient civilizations and historical events. Vintage cars, which are not just modes of transportation but pieces of art and engineering. Marvels and fine art, which captures the essence of human creativity and expression. Stamps, which can be miniature works of art and historical records. And baseball cards, which connect fans to their favorite sports heroes, you name it. Collectibles are all about passion and the thrill of the hunt. The joy of finding that one elusive item can be incredibly rewarding. They can be a good investment if you know what you're doing and you're passionate about the items you're collecting. Knowledge and research are key. The key is to buy low, sell high, and hold on to items that are likely to appreciate in value over time. Patience and timing can make a significant difference. But remember, it's important to invest in things you genuinely enjoy, because the true value of a collection lies in the joy it brings you. Even if they don't make you a millionaire, the satisfaction and happiness they provide can be priceless. You'll still have a collection you love, a treasure trove of memories and stories that you can cherish for a lifetime. So there you have it, the 10 asset classes that are making people rich in the USA. From real estate to stocks, bonds to crypto, and everything in between, there are so many different ways to build wealth and achieve financial freedom. Remember, the key is to do your research, understand your risk tolerance, and invest in assets that align with your financial goals. Don't forget to like this video if you found it helpful, comment below, and let me know which asset class you're most interested in, and subscribe to the channel for more videos on personal finance, investing, and building wealth. Thanks for watching.